Hi, this is Stock Investor Davis. Let's take a look at TSM reviewing its 2023 third quarter results, followed by looking ahead at its fourth quarter guidance, and closing with a technical analysis of the stock price. There are chapters below if you want to skip ahead to a certain section. Please like and subscribe. Starting with the major events occurring this past quarter, which will likely help us understand the quarter's results. We see the company announcing a breakthrough in its chip stacking used in semiconductor packaging, a couple investments including $432 million in IMS Nanofabrication Global, which is an Intel subsidiary, and $100 million in Arm Holdings. The announcement that MediaTek developed a chip using 3 nanometer process, which is set for volume production in 2024, a joint venture with Bosch, Infineon, and NXP creating ESMC, which is European Semiconductor Manufacturing Company, and inaugurates Global Research and Development Center. We'll see if these events have any noticeable impacts on the financial statements this quarter. Before we begin picking apart its financial statements, keep in mind that this company uses new Taiwanese dollars as its currency, which has a conversion rate of about 3 cents per $1. That said, we will use the company's figures in new Taiwanese dollars unless otherwise noted. With that out of the way, let's look at its income statement comparing the first 9 months of 2023 to 2022. Starting at the top, we see total revenue down 6% to about $1.5 trillion, while its cost of revenue is up 2% to $692 billion, resulting in a gross profit going down 12% to $843 billion. That said, the company maintains a favorable gross margin percentage near 55%. Alternatively, this is down from near 58% last year. Moving down to its operating expenses and income from operations, we see its operating expenses up 12% to $182 billion, and its income from operations down 17% to $661 billion, which is a margin of 43%. Similar to the gross margin, this is impressive, but when compared to last year's 48% operating margin, it is a decline. Closing with its net income, we see it's down nearly 17% to $599 billion, which is a 39% profit margin. I haven't come across many companies with this type of profitability. Similar to above, when compared to last year, its profit margin was 44%, showing a decline. This correlates to its earnings per share. Let's now break out the data into this quarter specifically. Shifting to the third quarter results alone and its comparison to the prior quarter and last year's third quarter, we see a flat or slight improvements compared to the prior quarter, but declines when compared to its prior year's third quarter. Its revenue, $547 billion, is up $66 billion quarter over quarter, but down $66 billion year over year. Its gross profit margin remains near 54% quarter over quarter, which is down from last year at around 60%. Within its operating expenses, we see its research and development is up $9 billion quarter over quarter and up $8 billion year over year. Its operating margin is near 42% quarter over quarter, but down year over year from 50%. Then its net income percentage relatively flat, near 38%, but year over year, it's a decline from almost 46%. Lastly, its earnings per share at $8.14 is up from $7.01 quarter over quarter, but down $10.83 year over year. Looking into its revenue by technology, we see the companies are shifting more into the lower nanometer chips, where last year 53% of revenue were sales of 7 nanometer chips or less. Now with the 3 nanometer chips available, we're seeing 59% is 7 nanometers or less. Digging into its revenue by platform, we see a big reversal in growth from its top 2 segments, smartphones and HPC. These 2 segments make up over 80% of its revenue, HPC growth quarter over quarter going from -5% to up 6%, and smartphones going from -9% to up 33%. Switching to its balance sheet, we see its current ratio is over 2 and enough cash to cover all of its current liabilities. It makes me wonder how it intends to utilize that cash, nearly $1.3 trillion. Outside of that, the more notable changes include increases in its property, plant, and equipment, over $700 billion, accrued expenses up about $100 billion, and unappropriated earnings up $616 billion. Transitioning to its cash flow statement, we have highlighted the larger movements for the 9 months ending. We see a large increase in its depreciation and amortization, $381 billion, which makes sense given its added spending in property, plant, and equipment, which is $779 billion, which is the second highlight noted. And lastly, its dividend paid is over $213 billion spent. Shifting to its guidance, management is projecting between $18.8 billion and $19.6 billion in US dollars, which is a healthy jump from $17.2 billion USD in its third quarter. Also, management now projecting a gross profit margin between 51.5 and 53.5%, where it was 54.3% in this third quarter, and operating profit margin between 39.5 and 41.5%, where it was 41.7% in the third quarter. Looking at the analyst projections, all in US dollars, we first noticed that the analysts are projecting $18.8 billion in revenue for the fourth quarter. This is at the bottom of the range management provided. Looking at the full year, $66.7 billion is a little low based on the current results, which is $49.67 billion, plus the projected $18.8 billion, which will equal about $68.5 billion. So again, a little low. Then its earnings per share is projected to be $1.36, which again seems a little low based on its management's expectations, but maybe closer to this figure if the margins decrease as management stated. Also worth pointing out, analysts show an expected revenue growth above 20% next year, which will be very exciting for a developed company such as this. Of course, we'll see how it all plays out over time. Wrapping up with the technical analysis, TSM, $97. It appears to have broken its uptrend forming in November 2022. It likely found support at $85, and some resistance is noted at 93 and 104. Alternatively, this may have been an overcorrection. The price is okay. Thank you for watching. Please like and subscribe.